Welcome to The Deep Dive, the show where we really get into the nitty-gritty of complex topics and sift through all that info to bring you the key takeaways.
Exactly, your shortcut to becoming seriously informed.
And today we're taking a deep dive into Newsmax Inc. That's ticker symbol NMAX. And we'll be looking at it through the lens of value investing.
So to make sure we're all on the same page, all the research we're using for this deep dive is available in the description below, so feel free to follow along.
Yeah, absolutely. Check it out. So let's jump right in. Our mission today is to understand the ins and outs of Newsmax as a business and whether or not it holds potential as an investment.
And to do that, we'll be drawing directly from the research report, which, as you said, is linked below. We've uncovered some pretty fascinating stuff in there. So let's get started, shall we?
Let's do it. Let's start with understanding the business itself. Newsmax Inc. is a holding company, but the real core of the operation is its wholly owned subsidiary, Newsmax Media, Inc.
Right, and it's not just a simple news outlet. It's actually a surprisingly diverse news enterprise.
Yeah, for sure. One of the things that jumps out right away is the sheer variety of revenue streams they have. You have digital, linear, that's your cable TV and over-the-top or OTT television advertising.
Mm-hmm. And then on top of that, they're bringing in money from online and digital ads, cable license fees, and those streaming subscriptions everyone's talking about for their Newsmax Plus and Newsmax 2 services.
And it doesn't even stop there. You've got Newsmax.com, the mobile app, the print magazine, direct subscription sales.
It's like they're everywhere.
They really are. It's like they've made a conscious effort to be wherever their audience is.
And I think that's exactly right. If you look at the bigger picture, this diversification seems like a very deliberate strategy. You know, the report actually talks about the potential decline in cable viewership over the long term.
Yeah, that's a huge trend we're seeing. Like, everyone's cutting the cord.
Right. So by establishing themselves so firmly in the digital world and with subscription models, they're basically creating a safety net.
Makes sense. And when you look at their key products and services, it's a pretty broad portfolio, wouldn't you say?
Definitely. You've got the obvious one, the Newsmax channel, the cable news network, but then you've also got Newsmax.com, covering everything from politics to health to finance.
And then, as you mentioned, the streaming options, both free and paid, the app, the magazine, it's a lot.
Yeah, it really does seem like they're aiming to cater to pretty much every possible preference. I mean, even beyond the core news stuff, they've got things like humanics books for publishing.
Oh, yeah, that's right.
And then specialized content online for health and finance. They even have some interest in health insurance ventures.
Wow.
It's a really comprehensive approach. And then they've also got that ROI media strategies arm for digital marketing, which suggests they're not just focused on creating content, but also on how it gets distributed and who sees it.
So strategically speaking, it seems like they're doing a lot of things right. But what about their actual position in the market? Have they really made any significant waves?
Oh, absolutely. Being the fourth highest rated cable news channel is not something to scoff at. And reaching over 40 million Americans regularly, that's a pretty substantial audience. What do you think?
That's a huge audience, especially when you consider they're accessible on platforms like YouTube TV, which puts them in, nearly 60 million households. That's massive reach.
Right. And the fact that they're recognized by the Reuters Institute as one of the top news brands in the U.S., and the way Forbes and the New York Times describe them.
The news powerhouse, a potent force.
Exactly. It all points to this really rapid rise they've had and a pretty significant impact, especially among conservative viewers. You don't see that kind of market penetration happen so quickly very often.
Yeah.
It's interesting, though. What do you think is the key to their appeal? What are they offering that's attracting so many viewers?
Well, the report really emphasizes their focus on what they call independent news. And they pair that with what they claim is insightful perspective and honest opinion. They position themselves as champions of things like a free press and balanced coverage, although, like you said before, that's certainly debatable.
For sure. But it's a message that clearly resonates with their target audience. They've really carved out this niche as the go-to source for real news and opinion, especially for conservatives.
Yeah, and their tagline, America's News Page, really hammers that home.
Totally. It's a very deliberate and targeted value proposition for a specific segment of the market. Now, taking a step back and looking at the industry as a whole, it's important to understand the context in which Newsmax operates. And the report actually points out something kind of surprising.
What's that?
The broadcasting and cable TV market is projected to keep growing.
Really? You'd think with all the talk about cord cutting.
I know, right? But the report says it's going to go from like $365 billion in 2025 to over $483 billion by 2034.
Wow. So a KG A compound annual growth rate of over 3%. That's not bad at all.
Yeah, it's not insignificant. And the report breaks down the main drivers behind this growth. So one of the biggest things is the increasing demand for personalized content.
That makes sense.
And then you've got all these advancements in technology, things like 5G networks, IP-based video delivery, cloud computing, all that stuff.
Okay. So even though the way people are consuming content is changing, the overall market is still expanding.
Exactly. And that's where that shift we talked about earlier comes in.
Right, the decline in linear TV viewership and the rise of things like connected TV and ad-supported streaming.
Yep. And naturally, advertising spending is going to follow those trends. So linear TV ad dollars are expected to decrease, while connected TV ad spending is projected to absolutely explode.
I mean, the report says U.S. connected TV ad spending could be over $32 billion by 2025. That's a lot of money moving around.
Yeah, it's a huge shift. And Newsmax, being present on all these different platforms, is well positioned to capture a piece of that pie.
But they're not alone, are they?
Not at all. The competition in this industry is fierce. You've got the big players in cable news, Fox News, CNN, MSNBC, all battling it out. And then, of course, there's the whole vast world of digital media.
It's interesting, though, because the CEO of Newsmax has actually said he wants to challenge Fox News directly, particularly when it comes to those conservative viewers who are maybe looking for something different.
That's right. And while their digital reach isn't quite at the level of Fox Digital or CNN Digital yet, it's already comparable to CNBC and MSNBC. And according to the report, there's actually quite a bit of overlap in viewership between Newsmax, OAN, and Fox News.
So they're all kind of going after the same core audience in a way.
It seems that way. And then you have to consider their other competitors, like the advertising networks and all the various media organizations vying for attention. It really is a very crowded and competitive market.
So with all that competition, what does the regulatory landscape look like? Who's keeping an eye on this industry?
The main player is the FCC, the Federal Communications Commission. They oversee a whole range of communications, from radio and TV to wireline, satellite, and cable.
But doesn't the First Amendment limit how much the FCC can actually control the content itself?
That's right. The First Amendment provides pretty strong protections for free speech. And cable TV, since it uses private transmission infrastructure, is actually regulated a little differently than traditional broadcast TV. So there's a bit more leeway there.
The report also mentioned the repeal of the Fairness Doctrine back in 1987. What was that all about?
Well, the Fairness Doctrine basically required broadcasters to present balanced and fair discussions on controversial issues.
Ah, so that's why things feel so much more one-sided these days.
Yeah, it's definitely a contributing factor. When the Fairness Doctrine was repealed, it basically gave cable news networks like Newsmax a lot more freedom to shape their content. And it definitely made it harder for new players to come in and shake things up.
So what are those barriers to entry? What makes it so difficult for a new competitor to just pop up and start challenging someone like Newsmax?
Well, for starters, you need a lot of money. Launching and maintaining a news network is incredibly expensive.
Yeah, that makes sense.
And then you've got to navigate the whole world of licenses and regulations, which is no easy feat.
Definitely.
And then there are the established players, like Newsmax, who already have strong brand identities and a loyal audience. It's tough to break into a market when people are already so attached to what they know. Plus, getting access to distribution channels like cable and satellite providers can be really difficult for newcomers.
Yeah, it sounds like it's not for the faint of heart.
And then you've got things like economies of scale, where the big players can just operate more efficiently because of their size, and the strategies they use to differentiate themselves, which further strengthens that audience loyalty. In the digital world, there are also technological barriers and intellectual property protections to think about. And let's not forget the influence of government policies and lobbying. It all adds up to a pretty daunting set of challenges for anyone trying to enter this market.
Okay, so Newsmax has managed to overcome those hurdles and establish a pretty solid position for itself. So what are their secrets? What are their main competitive advantages?
Well, first and foremost, their brand is strong. They have real recognition, especially within that conservative demographic.
Yeah, being the fourth highest rated cable news channel and reaching over 40 million viewers regularly, that's a testament to how well they've built their brand.
Absolutely. And remember, they were the only cable news network to see viewership growth across all day parts last year. That's pretty significant. And then you have those acknowledgments from sources like Forbes and the New York Times. Those really add weight to their reputation.
For sure. But what about things like cost advantages or economies of scale? Do they have any significant edge in those areas?
The report doesn't really highlight any major cost advantages. It mentions that their digital-first origins might give them some efficiencies compared to older media companies, but
Okay.
their recent IPO and their stated focus on growth suggest they're not really prioritizing aggressive cost-cutting right now. It's more about expansion.
Makes sense.
Now, another interesting aspect is the whole concept of network effects. Basically, the idea that a service becomes more valuable as more people use it, which then attracts even more users.
Right. So how does that play into Newsmax's success?
Well, in a few ways. A larger viewership means they can attract more advertisers.
Right.
Right. And that means more revenue, which they can then reinvest to improve their content and reach, which attracts even more viewers. It's a positive feedback loop.
Ah, I see.
And their digital platforms also benefit from this. The more people use their website, their app, their streaming services, the more appealing those platforms become to everyone else.
So it's like this snowball effect.
Exactly. And within their specific audience, there's this really strong sense of shared ideology.
Huh.
So people are more likely to share content, recommend it to others, and that expands their reach organically.
That makes sense. And what about the concept of switching costs? Like, how difficult is it for someone who watches Newsmax to switch to a different news outlet? Is there anything keeping them there?
Well, financially speaking, there's not really a cost to switching. People can just change the channel or go to a different website. But the report points out something really interesting: psychological switching costs. For viewers who are strongly aligned with Newsmax's ideology, switching to another network can feel like betrayal almost.
Like they're abandoning their tribe.
Exactly. And if they perceive other networks as being biased against their views or even hostile, that creates a huge barrier to switching. And Newsmax has definitely capitalized on this. They've even attracted viewers who were previously loyal to Fox News by positioning themselves as the true voice of whatever.
The real deal.
Right. And the fact that they offer free content on Newsmax 2 and YouTube also removes any financial barriers for new viewers.
Mm-hmm. But there is that recent change where they're now requiring pay TV distributors to pay fees for carrying Newsmax, right?
Yeah, and that could introduce a financial cost for some viewers down the line, potentially making it harder for them to switch away. But overall, I think that ideological alignment is the real key factor here. It creates a real sense of stickiness for their core audience.
So it's not just about convenience or affordability, it's about a deeper connection.
Exactly. Now, beyond the brand strengths and audience loyalty, does Newsmax have any other unique assets or capabilities that give them an edge? What do you think?
Well, their audience itself is a pretty valuable asset. They have a large and growing viewership, specifically within the conservative political spectrum, and that's incredibly attractive to advertisers.
Oh, absolutely. That's a gold mine for advertisers trying to reach that particular demographic.
Right. And they're not just on cable TV. They've got that multi-platform presence across digital, streaming, and even print. That allows them to cater to a much wider range of content consumption habits.
And their brand identity is very clearly defined, very focused on conservative news and commentary. That sets them apart in a crowded media landscape. And they're actively working to expand their distribution, like with that YouTube TV launch.
So they're not just sitting back and hoping for the best.
No, they're actively working to reach more people. But at the end of the day, I think their biggest asset is the loyalty and engagement of their audience. That deep connection with their viewers is what truly sets them apart.
Okay, so let's do a quick recap of Chapter 1 based on those key questions from the report. What does Newsmax do? They provide news and information, primarily targeting a conservative audience across various platforms.
Right. And how do they make money? Through advertising, cable license fees, and those direct-to-consumer subscriptions.
Okay. Does the industry have a long-term future? Well, despite the changes in linear TV viewership, the overall market for video content is expected to grow.
Exactly. And Newsmax's multi-platform approach puts them in a good position to adapt to those changes.
And lastly, what makes their business hard to replicate? That strong brand recognition, the loyalty of their audience, and their reach across multiple platforms.
Couldn't have said it better myself.
Okay, now on to Chapter 2, Management and Evaluation. Let's take a look at the people running the show.
All right, so the captain of this ship since 1998 is Christopher Ruddy. He's the CEO, the founder, and the majority shareholder.
So he's really been there from the beginning, guiding Newsmax's growth from a simple website to the multimedia force it is today.
Exactly. He's been the driving force behind their success, especially within the conservative market.
But the report does mention some bumps along the road, specifically some scrutiny around their content and reporting, especially regarding some big political events.
Right. And while they've achieved impressive audience growth, the fact that they're consistently reporting net losses and that there's this negative equity situation, well, does raise some questions about the long-term financial sustainability under his leadership.
So it's a mixed bag, I guess. Audience growth and brand building on the one hand, financial losses and questions about content objectivity on the other. What about their track record in handling tough situations? How have they responded to crises in the past?
To be honest, the report doesn't provide a lot of specific details about their crisis response history. It does mention how they handled narratives around recent elections, which drew a lot of scrutiny and even some legal action.
Yeah, that was a big deal.
Right. They ended up defending their reporting, but there were also some clarifications and retractions issued. It kind of highlights the tightrope they walk between being a news provider and catering to a very specific political audience.
And the potential for misinformation in that kind of environment.
Exactly. The report suggests a more thorough look at how they've handled various types of crises would be helpful.
Okay, so crisis management, more analysis needed. What about transparency? How open have they been, both in terms of operational disclosures and in terms of the accuracy and objectivity of their reporting?
Well, historically, as a private company, they weren't subject to the same level of public disclosure requirements. But things changed with that DWA merger.
Right, the SPAC deal that took them public.
Exactly. So now they have to answer to the SEC, which means more transparency when it comes to financial reporting.
So that's good news for investors who want to know what's going on.
Absolutely. The report mentions that detailed financial information was probably harder to come by before they went public. And then there's the transparency of their reporting itself, which has been a subject of debate.
Yeah, there have been those criticisms about accuracy and potential bias.
Right. And that's something investors should definitely be aware of.
So considering their leadership, their crisis response, their transparency, what does the report say about their ethical reputation overall?
Well, it acknowledges that Newsmax has faced a lot of scrutiny regarding allegations of bias and misinformation, which has led to public criticism.
And this is a sensitive topic, especially in today's media landscape.
Absolutely. The report emphasizes that you can't really assess their ethical reputation without considering multiple perspectives. It's not black and white. Their loyal audience probably sees their reporting as completely ethical.
Because it aligns with their views.
Exactly. But external critics see it differently. It's a complex issue, especially in such a polarized media environment.
All right, so on to that key question. Are the management honest, capable, and shareholder-oriented? What's the verdict?
It's tough to say definitively. Ruddy has certainly demonstrated his ability to build the brand and grow the audience, but the financial losses are a concern. It's hard to say for sure if they're effectively using capital to benefit shareholders.
So investors will have to keep a close eye on how things develop.
Absolutely. Now let's move on to how the management team is allocating the company's capital. Where are they investing their resources?
Where's the money going?
Well, the report points to a consistent pattern of investment in their core operations. They're putting money into expanding their TV channel, developing their digital platforms, producing more content.
So they're doubling down on what they do best.
Yeah, that's one way to look at it. And the YouTube TV launch is a good example of how they're investing in expanding their distribution reach.
And they're also branching out a bit with things like Newsmax magazine and Humanix books.
Right, so there's a diversification strategy at play as well. But the overall goal seems to be to solidify their position in that conservative news and information market.
Makes sense. What about mergers and acquisitions? Are they looking to grow by buying up other companies?
Well, the report doesn't mention any significant history of M&A activity. And that Deathwasi merger they did was really just about going public, not about acquiring another business.
So no big shopping sprees so far.
Not really.
Yeah.
As for their policies on rewarding shareholders, things like share buybacks and dividends,
Are they sharing the wealth?
well, considering they just went public and they're not exactly rolling in profits right now,
Right.
it's not surprising that there's no history of share buybacks or dividend payments. And they haven't announced any plans for either, which is pretty typical for a company in their position.
Makes sense. They probably need to focus on becoming profitable first before they start handing out cash.
Exactly. And speaking of profitability, let's talk about return on invested capital, or ROIC. This is all about how effectively they're using their capital to actually generate profits.
Are they getting bang for their buck?
Well, because of the limited financial data available since their IPO, it's difficult to calculate their ROIC precisely. But the report suggests it's likely negative right now. They're losing money, not making it.
That's not a great sign.
No, it's a real concern for investors. It basically means they're not generating a return on the capital they've invested. So we'll need to see those future financial reports to get a clearer picture of how things are trending.
So to sum up this management evaluation, the question was, are they using capital effectively to grow shareholder value? And the answer is,
Jury's still out. They build a big audience, but that hasn't translated into consistent profits yet. Investors need to watch those financials very carefully.
all right, we've covered a lot of ground so far. We've looked at their business model, their management, and their financial health. Before we dive into the next chapter, let's take a quick break for a word from our sponsor, StockAnalytics.ai.
We want to tell you about a really cool tool that can help you get these kinds of insights on your own whenever you need them.
Imagine this. You can generate a full report, like a detailed podcast or even a video analysis on any stock whenever you want.
And what if that analysis was tailored to you? Like, your level of financial knowledge, how deep you want to go in each area.
At StockAnalytics.ai, we're not just imagining it, we're building it. We're creating a platform that lets you do all of that. And we're taking it even further. We're adding an interactive interface where you can ask specific questions about the stock, a voice-controlled stock screener to find your next great investment, and even a sophisticated portfolio analyzer that'll help you manage risk and stress test your holdings.
Don't wait. Go to stockanalytics.ai today and check out our demo. You can see the power of this technology firsthand. We've opened up our waiting list for beta users, and early adopters get 50% off. Plus, you might even get a chance to invest in the future of, well, financial intelligence.
Sign up now at stockanalytics.ai. You don't want to miss this. Welcome back to the deep dive. We've really dug into Newsmax's business, their leadership, and how they're doing financially. Now let's shift gears and talk about Chapter 4, Market Sentiment. What's the overall feeling about this stock in the market right now? What do people think?
Well, it's been a bit of a roller coaster since they went public in late 2023. Their stock price has been all over the place, which suggests there's a lot of speculation going on and a lot of uncertainty about their future.
Yeah, it seems like there was some initial excitement after the IPO, but then things got a bit shaky.
Exactly. And it seems like the market's perception of them is really tied to their political leanings and what's happening in the media industry as a whole. And given those financial losses we talked about.
It makes you wonder if their current valuation is based more on hopes and dreams than on actual performance.
That's a great point. The market might be betting on their future growth and the strength of their brand rather than focusing on their current profitability or their less than stellar balance sheet.
So what are the professional analysts saying? Are there any price targets or ratings out there?
Well, that's the thing. Because they're relatively new to the public market, there hasn't been a lot of coverage from the big analyst firms yet. They tend to focus on the larger, more established companies.
So it's hard to get a read on what the experts think.
Exactly. There's not a clear consensus out there, which contributes to that uncertainty we see in the stock price.
What about recent news and events? How have those been impacting the market's perception?
Yeah, any big headlines we should be aware of?
Well, it's been a mixed bag. Any news about audience growth tends to be viewed positively, and the IPO itself was obviously a big event. But then you have all the ongoing discussions and scrutiny about their content and editorial decisions.
And that kind of stuff can really spook investors. Absolutely. It introduces uncertainty. And then there was that launch on YouTube TV back in January, which was a big win for them in terms of expanding their reach.
But the questions about their reporting and their financial performance haven't gone away, have they?
Nope. And that's going to continue to shape how the market perceives them.
Okay, so one last thing on market sentiment. What about short interest and options activity? Are there a lot of people betting against Newsmax?
As of mid-March, short interest was actually pretty low, less than 1%. So it doesn't seem like a lot of investors are actively betting on a decline in their stock price.
So no big short squeeze on the horizon?
Not necessarily. The report didn't include data on options trading, which could give us a more nuanced view of market sentiment.
But overall, it sounds like the market is still trying to figure out what to make of Newsmax.
Yeah, there's definitely a lot of uncertainty out there. All right, let's move on to Chapter 5. Ownership structure. Who owns Newsmax and why should investors care about this?
Who's calling the shots?
Understanding the ownership structure is important because it can tell us a lot about how the company is run, how decisions are made, and how much control certain individuals or groups might have.
Makes sense.
So first, let's look at institutional ownership. And according to the report, it seems to be relatively low. There are a few institutional investors mentioned, but their stakes are fairly modest.
So the big investment firms aren't exactly rushing in.
Not really. It could be that they're taking a wait-and-see approach, or maybe they just see the stock as too speculative right now.
Okay. What about the insiders? How much stock do the people running the company own?
Well, as we mentioned before, Christopher Ruddy, the CEO and founder, holds a significant chunk of the shares.
So he's got a lot of skin in the game.
Definitely. And that gives him a lot of influence over the company's direction. To get the most up-to-date info on insider transactions, we'd have to look at their SEC filings.
So basically, we have a situation where ownership is pretty concentrated in the hands of Mr. Ruddy.
Exactly. And what does that mean for corporate governance? Well, because of his controlling stake, Newsmax is classified as a controlled company under NASDAQ rules.
So different rules apply to them.
That's right. They're actually exempt from certain governance requirements that apply to more widely held companies. For example, they don't have to have a completely independent board of directors.
So there's less oversight from independent parties.
Exactly. And the report points out that this is something investors should be aware of. It can introduce certain risks.
Okay, that's good to know. Now, on to Chapter 6, risk assessment. The report uses a SWOT analysis for this, which is helpful.
Yeah, it's a good way to get a comprehensive overview of the risks and opportunities. So let's start with the strengths. What does Newsmax have going for it?
What are their superpowers?
Well, first and foremost, they have a strong brand, especially within the conservative media landscape. And it's a brand that continues to grow.
It's huge.
Right. And then they have that significant multi-platform reach, allowing them to connect with their audience in various ways.
Yes. And we can't forget about that revenue growth they've been experiencing.
Yeah, that's definitely a positive sign. And of course, there's that loyal and engaged audience we keep talking about.
Right. Those are the viewers who are really dedicated to Newsmax.
Exactly. And don't forget, they were the only cable news network to see viewership growth across all day parts last year. That's a real feather in their cap.
Okay, so they've got some clear advantages, but what about their weaknesses? What are the potential vulnerabilities they need to address?
Well, the report doesn't hold back here. They point to those persistent net losses and the negative profit margins, which are definitely a cause for concern.
Yeah, that's not sustainable in the long run.
Right. And then there's that weak balance sheet with negative equity, which is a big red flag.
Uh-huh.
And they're burning through cash, indicated by that negative free cash flow. They're also facing potential short-term liquidity issues based on that negative working capital.
So there are some real financial challenges there.
Absolutely. And they're heavily reliant on advertising revenue, which can be volatile. And then there's that controlled company status, which, as we discussed, means less independent oversight.
So plenty of room for improvement.
Definitely. Now let's look at the potential opportunities. What are the positive developments that could benefit Newsmax in the future?
What are their chances to shine?
Well, the conservative media market is still growing, so there's potential for them to expand their reach even further within that space.
Makes sense.
And their digital and streaming platforms offer lots of opportunities for growth. As their audience grows, so does their potential to attract more advertising revenue.
And they could potentially attract viewers who are dissatisfied with other news options.
Right. And there's always the possibility of strategic partnerships or acquisitions down the line.
So they're not stuck in a rut. There are paths for them to explore.
Exactly. Now let's look at the flip side. The threats. What are the external factors that could negatively impact their business?
What are the storm clouds on the horizon?
Well, competition is fierce, both in cable news and in the digital media world.
Yeah, we talked about that earlier.
Right. And there's always the chance that cable TV viewership will continue to decline, which would hurt them.
And all the scrutiny and criticism around their reporting, that could damage their brand reputation.
Absolutely. And they're quite reliant on key personnel, especially Christopher Ruddy, if something were to happen to him.
It could really shake things up.
It could. And then there are broader trends to consider, like shifts in the political landscape or changes in audience preferences. They can't control those things.
And let's not forget about potential regulatory changes or legal challenges. Those are always wild cards.
Yeah, you never know what might happen on that front. And of course, there's always the risk of an economic downturn, which would likely lead to a decrease in advertising spending.
So there are definitely some significant risks to consider.
Okay, let's move on to our final chapter, Chapter 7. Brief conclusion. Time to put it all together. All right, so after all that, what can we say about Newsmax? Well, they've clearly done a great job building a strong brand and attracting a substantial audience within their niche. But they're facing some real financial challenges.
Yeah, those losses and that weak balance sheet are definitely a concern.
Right. And the current market valuation seems to be based more on speculation than on their actual performance. And then there's that concentrated ownership structure, which has implications for how they're governed. The SWOT analysis shows they have both strengths and weaknesses, and they're facing both opportunities and threats.
So it's a mixed bag overall. What does the report say about Newsmax as a potential investment right now?
They're pretty clear. Investing in Newsmax at this point is highly speculative and comes with significant risks.
So not exactly a slam dunk.
Not at all. They actually say it doesn't really align with the core principles of value investing, especially when it comes to profitability and financial strength. So they recommend proceeding with extreme caution.
That sounds like good advice. So they're not saying it's a bad investment outright, just that there are a lot of risks involved.
Exactly. They basically say the company's future hinges on whether they can achieve consistent profitability and get their debt under control. So investors need to keep a close eye on those things.
Well, that brings us to the end of our deep dive into Newsmax. We've covered a lot of ground, but we have one final thought for you to consider.
But before we get to that, just a quick reminder. If you enjoyed this deep dive and found it helpful, please consider subscribing to the Stock Analytics AI YouTube channel for more insightful breakdowns of complex topics. And don't forget to check out the research report linked below for even more detail on Newsmax.
And remember, everything we've discussed here is for informational purposes only and is not financial advice. Always do your own thorough research before making any investment decisions.
Now, for that final thought, given Newsmax's focus and their specific audience, how might potential changes to regulations regarding online content moderation impact their business model and their future growth?
That's a really interesting question to think about. The regulatory landscape is always evolving, and any changes in that area could have a big impact on companies like Newsmax.
Exactly. So as you continue to explore this topic and learn more about the media landscape, keep that question in mind.
Well, that wraps up our deep dive into Newsmax. We hope you found this exploration informative and helpful. Make sure to subscribe to the deep dive for more in-depth analyses of complex and fascinating topics. We'll see you next time.